Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 27th of May, and it's a good start to the week, especially given the rug pull bear trap situation we had towards 8,600 on Friday. We're already back near the recent highs for May and looking for the top of that broadening triangle from the end of March 2024 as high as 9,000 by the end of next month. Hopefully it would be a bit sooner than that. Upside valid now while we're above the 8,700 zone. That should be enough in terms of the upside happening, especially given the market sentiment driven towards Trump always chickening out on any announcement he makes on tariffs, and he's done that with the EU and delayed it till July. Moving on to the DAX, and here presumably the benefits are being felt as well in Germany. Here you can see that we're very close to our target there, 24,400, now at the top of that rising trend channel from back at the end of March last year. And we're looking for that while we're above 23,500, but not quite ready to make a new upside prediction just yet. That's a big channel there, so any push through the top of that would be require a sort of a rethink on the upside. Moving along to the Dow, and here obviously closed yesterday as well. Got a situation where we'd already factored in the risk of having to test the 50-day line there at 41,000. Above that, looking for the top of the range, the recent range, 42,800. Not more complex than that at the moment. Market at the moment could be argued to be Bitcoin, given the way that everyone and their mother is now getting into the Bitcoin treasury strategy mode. A bit late, but there we are. Here we're currently trading either side of the old January resistance around 109, above 109, looking for 122. Hopefully by the end of next month. It may be a little bit too soon to call it up to or there may not be enough time left to call it up to 120 plus by the end of this month. Upside valid while we're above the recent resistance 106 on this market, and obviously we're in the aftermath of a golden cross between the 50 and 200 day moving averages, and quite a dynamic one there as well. Moving on to gold, and here the wind sort of taken out of the sails temporarily this month, but we had a decent bounce, bear trap rebound from just below the 50-day line, 31.99, and just waiting for a break of 33.80, and that April resistance line to take us up to the ultimate target here, as high as 38.40, perhaps by the end of next month, but that may be pushing it. We were obviously previously looking for 3,800 by the end of this month. The best we managed to get to was 3,500, as some will remember. Moving on to the stocks, starting off with Borders, and here you can see decent progress, V-shaped bull flag as I call it, looking for that target there, 8.6 pence, which has been called, the top of that channel been called here on several occasions, maybe too many occasions. Upside value while we're above the old February resistance there, around 6.75 pence. Onto a stock which I don't think we've looked at before, Caledonian Holdings, but here we've got a U-shaped turnaround with a rising 50-day line and even an RSI 50 rebound. So looking for Caledonian Holdings to head towards the 0.008 level if you're interested in that kind of thing, hopefully by the end of next month while we're above 003 on the downside. Moving on to a stock which is perhaps less fiddly, which is Cell AI, and here got through that near-term resistance line. We've been looking for the shares to get to the top of that rising trend channel at 0.54. In fact, I think after today's move, we can actually make that a little bit greater to 0.6. Looking for that by the end of next month while we're above recent resistance and the broken resistance line there at 0.25, which hopefully will be achievable, especially given the multiple bounces of the RSI along the neutral 50 level. Don't think you see that very often. That is a very strong signal and is presumably one of the factors that helped the shares gap up today. On to Coinsilium, where I've been like a broken record in terms of the potential upside here, and looks as though that record, it looks like it was nearly fulfilled, actually. We were looking for up to that red resistance line there at just shy of 9 pence. It was rather obscure, but still looking for that. And we just missed it by a fraction today. Hopefully we'll get there over the next 24 hours. High 8.45. That resistance line there around 8.8 pence. So that will be a nice win if we get it over the next 48 hours. Upside valid here while we're above, I suppose, mid-range today, which would be around the 6 3/4 pence level, but very happy with that one. Also very happy with the next one, which is Defence Holdings. Lots of winners today. We had the third target hit on Friday and the fourth target hit today at 0.72. So another very strong charting win there, above 0.72, obviously looking for the old resistance on the way down around 1.08. So let's just put that in now and see how long it takes to get there. I suppose today's peak was the sort of the best case scenario peak, so maybe we'll wait a little bit longer on that in terms of the next target there. But at least while we're above the previous target and the old resistance area around 0.5 pence, the upside should hopefully continue. Moving along to another winner, it's getting relentless now, which is Distil. Here we've had a broadening triangle base, and the top of the triangle there at 0.21. Looking for that over the next couple of weeks while we're above the 200-day line. It's interesting that we've gapped through the 200-day line today, so that gives extra power to the potential move to 0.22. The other point to note is that ahead of the rally in recent days, we've had double or triple bounces for the RSI at and above neutral 50. On to a stock which I charted last week in a very keen way, and here we've got Helix finally coming up with the goods. It would appear all roads leading to around the 23 pence area. Looking for that over the next few days now, maybe even by the end of the week, while we're above the previous initial target there at 18 pence, above 18, looking for 23 on Helix. On to a situation which is perhaps a bit more obscure, which is Geiger counter, but couldn't resist this one in the sense that it looks as though the shares are ready for a big move. We've had a sideways shuffle above a rising 50-day line, broken recent resistance at 39 pence, and above that looking for up to 65 pence. Punchy call by the end of next month in what is effectively an inverted head and shoulders, and breaking that neckline there at 39 pence. RSI has been above the neutral 50 level since the end of last month, but the main sizzle here is that breakout after the sideways shuffle. Moving on to Jangada, which is also a winner in terms of the charting here. We've managed to break the initial target there, 1.18, and looking for the final near-term target, 1.6 pence by the end of next month. Didn't get too far away from that this morning with a 1.4 pence handle, but 1.6 by the end of next month, hopefully on the cards there while we're above 1.18. On to Mast, another winner, and here the situation is that we had the first target there at 0.33, which took a long time. Second one obviously took rather less long, in fact no time at all really, 0.58, and above that we have a final target there at 0.9 pence. And that's a line from way back in December 23, and hoping for that by the end of next month or much sooner. Moving on to Novacyt, which is, I suppose, can also be notched up as a bit of a win, especially as it's up today. But technicals here were that we were looking for the shares to hit the top of that rising trend channel base, shown in black at 53 pence. We hit that on the nose and just come back slightly. End of day close above 53 pence, looking for an extra move up to maybe 61 pence by the end of next month. Obviously, that's the main resistance for the shares, above 60 pence for 2025. But an excellent jump today, and quite pleased with that one, has to be said. On to a company sporting one of the more grumpy CEOs around on Predator Oil and Gas, but doesn't seem to be getting in the way of the shares making a tentative recovery. We've had an RSI 50 rebound. We've bounced above the 50-day line as well, which is encouraging. And all we're waiting for now is really for that 50-day line to curl up, the blue line there, to give us a target as high as 5.25 pence by the end of next month. That would also basically fill the February gap down and probably even have a chance of meeting the 200-day line there at 6 pence by the time that happens. But like to see the shares remain above that 50-day line, around 3.1 pence. Moving along to Poolbeg, which has had a positive run-in with the FDA. Here you can see that if I can type in the name of the company, the shares have managed to bounce off what looks to be a rising trend channel base. A bit early on that one, but we've had a higher low for May versus April. Bit of RSI confirmation as well, and also the shares just about to close that gap and touch the 50-day line at 2.8. So end of day close at current levels or above should take the shares up to the top of the range, around 3.5 pence, in the first proper turnaround for the stock since this time last year. So managed to grab or pull a rabbit out of a hat there, FDA rabbit on Poolbeg. Upside value while we're above the latest swing low there at 2.45 pence. On to Roadside, and here the share buyback, real kicker for the stock. You can see that we're making progress, even though somebody told me off for saying that the share price has got nothing to do, or the chart's got nothing to do with the fundamentals here. But we do have potentially a rising trend channel there from September 2023, and that is heading for 56 pence currently. Looking at that by the end of July or even sooner, ideally by the end of June, while we're above recent resistance around 33 pence. And it should be noted that most times I'm heckled on social media, the heckler tends to be wrong. So let's see if they're wrong this time. Situation where there was crackpot commentary about the shares of Smarter Web when they were around 20p, saying that they were overvalued, 30p, something like that. But the shares have actually been a textbook charting situation. Firstly, we had support at 15, then we had support at 25, which held. Then we had the rising trend channel, the support line there, currently running at 44 pence. The initial target here on a break of the first target that we had earlier this month, around 52 pence. Above 52, first we were looking for 75, then we were looking for 80, and then we were looking for the top of that channel, the red line there, at 86 pence. Current situation is above 86 pence. We could actually get a blow-off move, up to as high as £1.26 by the end of next month. Ideally, we stay above today's support and Friday's resistance at 73 pence. Obviously, that is quite a big range. The best case would be we stay above the top of that broken channel there at 86 pence and go higher from there. Moving on to the last two. The first one where there is lots of speculation. It's only added up to 1.96% rise in the shares, but lots of speculation. But at least here, there was a TR1, so there is a bit of smoke which could possibly lead to fire. But amazing how there's so much speculation in the stock. Above the 200-day line, 1.17 pence, looking for 2.1 pence by the end of next month as a best case scenario, and ideally there's no breakback now below the 50-day line and recent resistance, 1.09 pence. The stock which has also behaved itself technically has been Zenith. This was highlighted with the break of 8.75 pence earlier this month. Above that, we were looking for a best case scenario target as high as 19 pence, which is now not too far away, and hopefully we'll get that over the next week or two while we're above the middle of today's range around the 14 pence level on an end of day close basis. That's it from me today. More updates tomorrow.